While China beta has been challenged over the last few years, we have always believed that the depth and the breadth of the market provides opportunities for alpha generation. In 2025, China stands out even from the beta lens, with several Chinese equity indexes outperforming broader emerging markets and even developed markets. Year-to-date 2025, MSCI China returned positive 12.8%, outperforming MSCI emerging markets up 2.3% and MSCI developed markets up 2.8%. We see three tailwinds for Chinese equities this year. First, technology innovation. New growth drivers such as DeepSeek AI, robotics, and autonomous driving are emerging, signaling a revitalization in the investment landscape. This represents the promise of a new China. The focus is no longer on policy stimulus or minor fluctuations in GDP, but on the growth drivers that are truly organic, market-oriented, and integral to the global supply chain. We believe it will also lead to a new capex and R&D investment cycle by private enterprises, areas that have seen little activities in the past 3 years. The increasing build-out of China for China value chain should make the technology sector less sensitive to US tariffs as well. Second, economic data stabilization. Chinese government continues to be supportive on both monetary and physical policies, with the focus of stimulus policies shifting from investment to consumption. The government is focused on boosting consumption, which can help revive domestic demand, reduce reliance on exports, and hopefully shift the economy from deflation back to inflation again. We have seen encouraging trends in the property sector and the PMI data lately to suggest some sign of stabilization. Third, flow support, especially domestic flow from southbound investors. China's falling local bond yields and still challenged property markets means that the large domestic savings pool is likely to flow into equities market. Aside from retail investors, onshore institutional investors are also buying offshore Chinese stocks via Stock Connect. Net buying in 2024 was double the size comparing to 2023 and 2022. The year-to-date buying momentum has been ever stronger than last year. In 2024, our fund was up by 23% in absolute terms, largely in line with the benchmark performance, excluding the FX impact. While the macro environment continued to be weak in China in 2024, the market finished the year strong given the key policy pivot in September. The Chinese government announced a series of stimulus measures on September 24th to revive the economy, spanning mortgage policy relaxation, interest rate cuts, and direct support from the stock market. In the fund, our holdings in technology, particularly in semiconductor value chain in Greater China, were the biggest contributors to the relative performance, as AI-driven momentum drove prices of companies with economic moats. Going into 2025, we are turning more constructive on Chinese equities and continue to recognize the need to selectivity in stock picking. There are a few areas we are positive on. 1. Greater China technology innovation. We have built up exposure in AI infrastructure since fourth quarter 2024. We have a preference for AI cloud, data centers, edge devices, AI software, as well as autonomous driving and the robotics value chain. 2. Stimulus beneficiaries. As mentioned before, we believe government stimulus measures can boost domestic consumption, including home appliances and consumer electronics. We also like low-ticket consumption, which we believe will recover faster than the luxury sector. Third, property supply chain. We are overweight copper and machinery, both key inputs in the stabilization of the property market. However, we continue to avoid developers where default risk remains high. As active managers, we also pay close attention to the risks such as geopolitics. We are building resilience in the portfolio by owning higher yield companies where we have exporters. We pay close attention to their geopolitical revenue split. All in all, we are optimistic about the prospects for Chinese equities in 2025. The market has a number of tailwinds in its favor, while the starting point for both valuations and the positionings remain compelling.